March country. Live in 3, 2, now. Right, tunaanza hii kitu sasa. Let's see what the market has for us today. It's now 11:25 a.m. PST. Nairobi, that should be 10:25. So this is where we had our trade yesterday. So let's do a quick recap. Actually, it's not there. Oh, it's here. Okay. Nice. So yesterday we took 2 trades. One was a loser, and then the other one was a banger trade. It was good. So unfortunately, this one lost, but this one worked out. This was a 1% risk. This one was 0.5. And I took partials, and I think let me see. I think the rest of the partials have been taken, right? If I do put these executions, let me go to a bigger time frame so we can see. This is where I had my 2 last take profits, and if we look at the account history, so these are the last 2 take profits, right? So yesterday we began the account at 410, took that loss. Now we are up to 412. So that's an additional of 2K. That is like a 1% increase on this account. Anyway, we now forget about yesterday. We don't get married with the past, and we focus on today. That is also a skill that you need to have. So that's yesterday. We forget completely about yesterday. Okay, so we have 30 minutes, so let's begin. So again, let's go to the monthly time frame so we can see where we are on a wide scope. Now, there is a video I have on my YouTube. Let me look for it. It's called my bad. How can I see all of my videos live? It's called analysis, which I should do another one. But see this right here. This is actually the first stream that I ever did, and it's called US30 top-down analysis, right? And you can go watch it. It was less than an hour, maybe 45 minutes, and you can see how I went about. You go about find these levels. I'll still do another one maybe this weekend. So these lines, they're not random, there's like a way to get to them, but normally they'll usually be the high of the month and the low of the month, and then focusing on the last up candle before there was a decline. So pretty much that's it. But I can do another video, and then we can do one every week, so we can get these levels, which are extremely important. So see, like this one, this is not just any other level. Okay, so let me get done with the monthly. So we've traded above these two previous monthly candles, and you can see we are getting a rejection, and meaning that the momentum to keep going up is now kind of wasting away, and well, it seems like we are coming down. So let's see the weekly time frame. See this level here, it's the half of the body of this up candle, right? Which is also like a resistance area. And by the body, I don't mean the whole week, I mean where you see, because we have the top, the bottom, then the open price and the closing price, right? Because this is where trading ended before we went to the next candle. So where we began, traded down, went up, where it closed, the half of it. On bigger time frames, you want to note those candles, especially on the last up candle before we saw a decline. So this will be the last up candle. So if we went past this candle, then this will be in perspective. But right now, this right here could be a potential something called a propulsion order block, where candles in the future stay below the half of it. So the wicks can go up, but the body stays below that half. So then we know that we're getting resistance, and we should see the market being propelled to the downside. So we can add that to our analysis for the day. Let me have this somewhere here. And then we also seen that open price on this weekly time frame, which this is where trading began, right? So we kind of see the market go back to that point, the last up candle before a decline. You can see there was a resistance here, another one here. So on this one and this one, we kind of getting the same vibe, even though we can see that they had some strength to surpass that zone. But this is a huge resistance to the downside. So I'm thinking today we might be looking for some shorts, but we'll see how that goes. Now we see that we do have this gap. They're usually also price magnets, but the gap for me will be confirmed when we close this week of trading. Will they reverse all this progress? I don't know. Yes, they can, but we'll see how that goes. I feel like that's all we need on the weekly time frame. And so let's go to the daily. Now looking at the daily, I see we are working this gap over here. They tried maybe to trade to this gap up here, but this is a huge resistance. So the daily is bearish. So now we have a monthly, a bearish, bullish month, bullish candle, even though we're seeing this huge resistance decline. Yeah, it is resistance. And then the daily candle is bearish. So now where would we be going to? Now the next level I can see is this one right here that we got from the weekly candle, which this is the previous week high. Actually, that one should be marked as the previous week high. This is the now on the weekly time frame. So this is the current week, this is the previous week, and then we have to mark this one right here as the previous week low right there. Those are close to each other, but it's okay. It's the previous month high. So now once we have that, going to the daily, we can now have a better, idea of where this market is headed to. The previous week high, that's okay. So if we keep on persisting to the downside, then we do have this level here, the previous month or the old weekly high that we just denoted over there. And then on the daily, we do have this down candle, this one. And what I'm gonna do is just gonna have it like this. So this is the down candle before we saw this push to the upside. The market will have a tendency to come back to that open price and then keep on shooting up. The wicks also, we have to, if you have to, but you can also note the half. And as you can see, the half of that wick is is giving us some sort of a support. So I feel like that is something I'm going to mark. But it's not going to be permanent. So let me use this line instead. Right there. So I usually call it, because it's on the daily time frame and it's a week and it's the half of that week, right? So instead of just writing the whole week, I just do that WCK and then EQ's equilibrium or half point. And as you can see, at that half is where we're getting that support from. So that's a thing that we want to note. Get rid of that box. That just helps me to show me like half. And that's it. So this is daily bullish order block. All it is, or you can say like it's the last down candle on the daily time frame before we saw this push to the upside. What this shows is, as this candle was going down, how I understand it is there's big people who are buying, right, as this candle was going down. So whenever it closed and you see that push, they already bought. So what we're doing is getting in sync. Now what happens is those that had sold are now in losses, right? So when this market comes down, they get rid of their losses and then they buy, they get into long positions. And that is why you have something, let me see, like what? Like some past, where's an example of that? Let's say like here they were selling, right? And that's why you see this reaction. So the ones who had bought, when this is going down, then losses. So when it comes up, they get rid of their losses and then they take short positions. And then now they get in sync with the market. Does it always work like that? No, sometimes it fails. Whoever bought here, they were taken out with this move. But when it comes back, they can get in sync with the market. So that's the whole point. Now, when the market comes here, will it be sustained to shoot all the way up? Personally, I don't care, because if I do get a short, all I want is just a small range on a smaller time frame, and it's enough for me, right? So that is why for me, I like scalping. Go in, get out. Maybe leave a small runner like we did yesterday. If they go and take my last TPs, it's okay. If they don't, I already made something. Now I'm going to still note that daily imbalance over there, which is this gap, when you look left, where this candle is not touching that candle. So now, if you've been taking notes, areas where the market is going to is inefficiencies such as this, or like a weekly high, for example, this weekly high or monthly highs. Those are usually beautiful places for price to draw liquidity. Now look at this gap here. Tell me this is a coincidence. Look at where price stopped, right? So those are kind of the things that I take a note of. Well, it didn't quite get there, but you get You get the point. But this one was already neutralized because we traded down and up. So think of it as someone painting, right? When you paint a wall and you're painting, let's say up, the places where you skip the paint, you come back to repaint, and then you keep on painting. That's the same thing that's happening here. Think of it as a painter. They left a gap, they come and repaint that area. So that's the whole thing. And if there's nothing to repaint, then we'll keep on going up to repaint the spaces that have no paint. So I think we're now on the daily time frame, and everything is now in perspective. The next thing we do, I like to have my things in order. So what was that daily? That the daily, whatever, what was that trend line? Previous day, week. No, we don't do that. Just do like a daily, week EQ, and that will be the daily pool right there. We have 20 minutes, so we still have some time. 20 minutes to 12 p.m. candle PST. I think that's it. At this point, we'll either keep on going down and surpass this low or that week, or this point, or trade all the way down to this open price, I'm suspecting. Or what's the probability that this momentum, that's the end for us to keep on going up? In my opinion, I think we'll keep on going down. But if in case we go to a lower time frame and we're seeing that there's a probability the market wants to keep on going up, then we have this level and this level, and if we are so animated, then this level up here. And I feel like that's enough for us to work with in this session. Will we get down here today? I don't think so, but let's just have that in perspective. Let's go to the 4-hour, which is my last high time frame level. Now I can see we did drop like this, so this is a range that we can consider from that high to that low. In case that's the low of the low, then we can start trading up past that level to that level. We do have this 4-hour space right there, right? This is what I'm going to do. Instead of having that box, I'll just have a line over there and then call it like 4-hour CB low. What I mean by CB is it's a sell side imbalance, buy side inefficiency. All that means is the market is painting downwards and it has left a space and it needs to go and repaint that area and then keep on going down. Just like I explained with the painter's analogy, if you're painting a wall and you're painting down, if you leave a space that doesn't have, can you stay? Okay, let me come this way. Okay, if you're painting a wall, like let's say going down like this, and you left a gap, you will logically whatever, go back and repaint that area and then keep on going down or go up. That's the logic, right? So now that we have this gap, if at all we'll be going up, then we can suspect that they want to come and repaint that gap over there, which is like this. But I don't want to draw a box, or it's okay, let me just draw the box. And it's on the 4-hour time frame, and then let's change that color to blue as well, or let's just do like, no, that's the middle line. The background can be pink or blue also, it's okay. Now looking on the 4-hour, where else do we see, like when we were painting, some business was left? Now we had this full gap from here to here, right? So the painting guy came all the way but has not finished that gap over there, right? the brush came up to here. So we do have this gap that they need to come and repaint. So I'm thinking that's because the way we are coming down on the 4 hour, I think that's the business right now. So those are things that we are now looking for, either trade up towards this space over here or trade towards this space over here. Now, a high probability when this is covered, then if we are turning around, then we are coming here. If we are too bearish and they don't need to come up here, then we have this low and then this low, and then on the 4 hour we did have this imbalance, which I think has already been painted. As you can see, they came and filled that gap. So I think it's irrelevant because there's no more gap. They have filled it. So the only other thing that I would see as going to is this huge gap here, and pretty much that is what price does, in my opinion. Coming to fill those inefficiencies. If there's nothing to fill, they start looking for these lows, for these swing lows. So for now, I think we do have enough objectives to time for in this session of trading. This pool, those levels that we put, and either come up here. I think that's it, in my opinion. So that one goes to the 4 hour pool, so everything can be organized. For example, if I don't want to see all this noise, I'll just delete everything. So this guy right here needs to be in the 4 hour. And then what we do is I like to name it. So when I go to a lower time frame, I can know what level we're working with. And I think that's it. We're good. Only a few minutes to 12, because that's when I start trading. Until then, I like to wait. Oh, look what we else. Look what else we have. See that gap? Ooh, that is also a price magnet. This is an imbalance, meaning, I mean, it is an imbalance. Like there's no bodies over there. Bodies are not touching. So this is also a price magnet, and I usually like to call it an imbalance, and it's on the 4 hour time frame. So okay. So once we are done with this, now we can go down to the 1 minute time frame and just wait for entry signal. If it works, well and good. If it doesn't, well and good, we move on. But now what we have done is we have placed ourselves in a high probability environment of winning, because we're not trading blindly. Unless I've missed something, I think that's it. Now I can also note this as the last 4 hour candle, the last down candle before we go up. Those are also places that price likes to come back to. Let me know if the music is too loud so I can reduce it. So the last down candle before we shot up, but the way this one came down and took the liquidity over there, actually that's it. We're good. Now let's go to the 1 hour. We're trading to the sideways, so we have to be careful of that. Consolidation. Another one here. But this is good because we can just come in here and then come back. Anyway, we'll see how that goes. So the 1 hour is still looking good. Look at this up candle before we decline. Price has come to that up candle and is now shooting to the downside. So the 1 hour for me, we're bearish. 4 hour bearish, daily bearish. Only the weekly and the monthly is where they have green candles, although we've seen a lot of rejection. 30 minute bearish. 15 minute time frame. We feel that gap over there, if you can see it. That gap. When they're just done filling it, Now they're going down. So we can see we have a bearish order flow, and we have to be watchful of this 4-hour unfinished business over here. This is what I'm going to do. 4-hour, I just write U to mean that it's unfinished business, and I don't think we need that half line. Oh, look at this. On the 1 hour we do have this, but I'm sure we're not going to use it, but let me just have it. That is a very attractive area. Come on, 1 hour. It's on the 1 hour time frame. There we go. Let's go to the 30 minutes. So if we do keep on coming down and we cross this zone, then this is the next area we'll be coming to. In case this rejects, then what was this? Then that 4-hour imbalance, which is this gap here, is where we can revert back to. That's it. 15-minute time frame. What else do I see? That's it. So the next thing, I go to the 5-minute, and I like to note any 5-minute imbalances like this one over here, and that will now help me to get rid of that. I mean, I don't need the 1 hour. Price can still come in here and bounce up, but we already have that daily order, that daily high time frame level over there. So what I'll do is I'll mark this. See that right there? So it's supposed to be all the way from here to here, but you see they did come inside a little bit, so I usually like to update. So from that high to that low, we do have some unfinished business over there, and then take it all the way to the left, and this is the color that I have for the 5-minute right there. And then at this point I can get rid of that 1 hour. So those 5-minute inefficiencies, I've seen price countless times trade to them and reverse. So if we do get a sell, once we get to that 5-minute, if I don't want to close the trade, I have to break even. I have to get rid of the risk, because high probability is it will turn back. As you can see, it's an area, the last down candle, and then we shoot up. So logically the price trade will want to come back there. I think that's it, and we're done. Oh, the next thing we do is I pull up my 4-hour range, whatever, which is this one. All it does is it just shows me the last 3 4-hour candles, which would be this one, and this one, right? And I can be able to see those ranges on small time frames, and I can tell you that we are, let me see, let me just draw them out first. Oh man, I keep on scratching my nose. That means money is coming. Draw the first one and the second one. I don't have to, but I think it looks good. That one and the third one. And then let's get rid of that indicator. And now I can see that. So what I do when I go to a lower time frame, if we were up here, I'll be looking for sells. Now that we are down here, I'm looking for buys. And ideally, I would like us to come down, take out this low, and then start looking for longs, right? It's that simple. So right now we are in an area I call discount, which is a nice place to look for buys. But then again, we also have to consider that we are going bearish. So if we can also trade back up here, that will be a really nice place to take sales. Now, I can already tell that we've missed some good trades by not being here at 11. But then again, I'm good with just trading the 12. And guys, that's it. We can now go to the 1 minute and now wait for our setup to form. And let me pull up this indicator, which shows me my 30-minute ranges right there. That's all it does. It just shows me 30-minute ranges. And what that is on the 30-minute candles, it shows me the high and the low, the high and the low, and then we can see how they look like on a 1 minute. So ideally, I do trade the 30-minute time frame, if you think about it, because I have to wait for the 30-minute range to close. Now look at this. This is really nice. Let's see how. So we only have like 6 minutes to go, and then we'll see how we can go about this. Let's see if today we can also get another win. The other thing is also to monitor the previous day. So I'm going to the daily time frame, monitor the previous day high and low, and as you can see, we are within that range. That's also another way to kind of get your bias. For this one, I can see that they tried to take out the high, but they were not able to, so now they're going down. So ideally, this is where they might be coming to. But before we get down here, what resistance do we have? What is on our way? And all these levels that we've been putting is what is on our way, right? So we have to note all that. And I do have an indicator that shows me those levels on a lower time frame, and I think it's this one here. There we go. So it shows me the previous day high is here, the previous day low is here, and now we are at the previous day half point, which also offers support and resistance. As you can see how it's hugging that half point of the previous day levels, the EQ. So now we can be watchful of that, right? So this one can be up to 1 p.m. somewhere there. Now, what would I like to see? I'd like to see us come into this pool and then come back into this 4-hour range. Okay, 4 more minutes to go. Whatever the market is doing, we're not going to be chasing price. We have to wait for that new 30-minute range to start, which is 12 to 12:30, and we can see if we can get something. If we can get a trade between 12 to 12:30, then we can look for one at 12:30. So now we just chill for our setup to form. In the meantime, let me show you how that setup will look like. Something like this. No, not that. What did I move? Oh, the market is going to the upside, but we don't care. Trying to look. Yep, see this right here? This is a good, beautiful example. So this right here is the previous. Can I delete this? No. Okay. This is the previous. I only have a few minutes. I need to see. I have to find a way to delete. Let me show you. Yeah, so now we can delete that. No. Yo, my guy. Okay, there we go. This is what I'm looking for. If I take this back, let me show you. Let's say that's it, right? Let's say I was trading. This is the 7 to 7:30 range. Now I'm waiting for the 7:30 range to end. So it will be something like that. It's now 7:30, 7:31, right? Looking at the previous 4-hour range, we are selling whenever it's gray. We are buying when it's gray because we're in the discount. We're selling when it's blue because we're in the premium. Ideally, you want to buy here, you want to sell here, right? Now what I'm waiting for is price to come below the previous 30-minute range and then come back inside the range, right? So this is how it would look like. Now we are outside Now what I do is I look for a swing high, and that will be my entry right there. Oh, it's 12. That will be my entry, and my stop loss, it was ever low that they leave. So in this case, that right there will be my entry with a sell stop, and then I want to start thinking of getting out of this trade anywhere in here. So ideally I'll go for a 1:2 at least. So let's see how this one would have worked. Now see, they do create another low, so I adjust my entry to that new low, as long as we are inside of this range, right? And boom, we're in right there, and all I want is 1:2. That's like my go-to whatever. So like that. It's now 12, so we have to hurry up, and boom, just about to take us out, right? But the stop loss is right there to do its job. And then boom, 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 and boom, just like that, 1:2, and you won your trade and you're out. 2% done for the day, or you can time for another setup. And you can see once we get to the blue area, they start seeing some sort of rejection. See, they're now trading to the downside. It's just something, and that's the same thing that we'll be looking to do today. Oh wait a minute, I need that for our zone back. Yo, come on. Okay, let's just draw it again. So as you can see, they have traded up to this discount zone, to the premium, which is good, because then we can look for now sell. See how the other one, we went to the blue area and then they started coming down. So it's ideally a nice place to start looking for sales, because I feel like this is unfinished business right here. This pool is going to be our TP area. Looking at the 5 minutes, but then again, we're also coming from this zone, so this could be the price now going to the upside. But let's see how this works. Previous week high. So now we're waiting for them to form a low that we'll use to go down. So for now, we don't have an entry trigger. So this is what I'm looking for. Price to come down, leave a low, either come, pass, or fail to pass. That low right there is going to be our entry, and we can hold to see if we can get back to this zone. We just chill. Still no swing low. We still want to keep on going up. Remember, we're coming from a discount area, which is a nice place to buy, and they can keep on going to the upside. So ideally this right here was our entry, but then again it was just 4 minutes to the end of the close. So these trades, I usually find them low probability. I'd rather wait for the 30-minute range to end. But if I took this trade, it would now be up 1.5%, 1.5 RR. So let's see. And we've been bearish, so I'll be looking for a sell. This for our imbalance, let's bring it here to 1 p.m. So we've taken out this 30-minute range high and this 30-minute range high, and what I'm suspecting is a low and a lower low, and probably for them to form another higher low if they want to go up. So I'm supporting, I'd like to see some sort of retracement. So let's chill, let's wait. We're now waiting for our entry trigger. Do you know how many people are now buying this because they think the market is shooting up? So they're chasing price, buy. Sometimes it does work, but for example, anybody buying this, buy, all of them have now been taken out, the market going down. which is still okay, because if you buy here and you're out here, you made your money. I need them to form a swing low for me. I don't like this down candle, usually used as support for price to go up. Looking at the 5 minutes, we have this up candle. Let me draw it. That up candle, it seems to be acting as support, so it's a 5 order block, bearish order block. All that means is just the last up candle before we saw a decline. Now if that holds, especially the half of it, price is being kept down, then there's a high probability that we can see some movement to the downside. The other thing I'll note is this one here. That one's gonna be a 5 minute bullish order block. All that is the last down candle on a 5 minute time frame before we saw price shoot up. Those are areas that price likes to come back to. So let's go back to the 1 minute, see if they've created a low. Not yet. So that right there, that right there is my entry trigger. Let me see how this candle closes. Okay, so let's get ready. We are about 37 seconds. If they don't run it, that's gonna be my entry. Okay, that right there is a low, and the stop loss just above this high. So we have 24 seconds. Let's see how we can do. I want to risk 1%, so let's create an order. We want to enter with a sell stop. The stop loss is 10.15, which is the number here, right there, and we are risking 1% of the account. And the candle closes in 1 second, so sell, stop, boom, we're in. So if it trades below that low, it will be triggered, and the stop is right there to do its job, and there we go. And they didn't fill us at that price. We've been filled from right there, but I let that one to stay. The next thing I do now is manage this trade. I'll take the fib from my entry to where my original entry was, and then I leave those fibs there, right? Once we get to 1:1, I reduce the risk by half, right? Once we get to 1.5, I break even, remove all the risk, and then once we get to 1:2 is ideally where I close the trade. But sometimes I like to bend those rules, and what I can do is take a big chunk over here, like 80%, and then I leave a runner. So that's something you can do if you do want to get out. Now, I don't like when I'm triggered the price to come back, but then again, the stop loss is right there to do its job. You guy, my guy. Now, once we advance, this low can be an area to take another trade, right? The problem is this: you kind of load so much, and it can come trigger both of your trades and then come and take you out. So you take a bigger loss, but then if it works, you take a bigger TP. But for now, let's just trade nicely. So we are experiencing some drawdown, meaning we still had some push to the upside. So this one looks like it's going to be a loss, but let's see. The stop is right there to do its job. I don't see what will cause that price to go down. Maybe this level over here, which is a 1 minute bearish order block. Well, you can see there's some sort of, yeah, I don't know. I like when my entries comes in, it just shoots to the downside. But let's see how this goes. So seems like that level is holding a little bit. I like to do some intermarket analysis sometimes These guys are also bullish because this is US 500 and US 100. I like that this one is getting some rejection, so let's see how this goes. Yeah, I don't like this so much. So we are working this gap on a 1 minute time frame. And then what time is it? It's now 12:10. There we go. There we go. There we go. There we go. Yep. We're in the money. We're just about to get to 1:1. So I'm gonna be reducing that risk by half. Let me extend this price to the. That was a really bad whatever right there. This is where my entry was, but because of slippage, they filled me in here. That kind of eats into your risk to reward ratio, but I like what we're doing. Now, this down candle here might be a problem, but then it's 1 minute, and I think we'll have enough momentum to go past it. And you see that small gap right there, and that is where price is kind of forming support. Now, the more you keep on watching these things, you can see how price really works sometimes. For example, you see it's not random. They did come into that gap, and that is where it stopped, and now it's working its way back, right? So if we have momentum to go to the downside, that level is not going to hold. Why are we going back up? So we didn't get to 1:1 of my original entry zone, so I'm not gonna be reducing this risk by half, because if I bring it too soon, then we're taken out prematurely. Yo, the stop losses right there. Bruh, why did you go back? Oh, this is not good. It's too near that stop loss. Now what? Okay, last line of defense would be that up candle right here. Yeah. So we are just about to go out. So that was the entry. The most we have seen of this trade is 0.7. Oh, I hope whatever is huge enough. Let me know if my chart is visible enough, or do I have it this big? I like to trade when it's kind of, at least, yep. Yeah. We're just about to lose $4,500. Or we could be making 7,900. Jesus, bloody. Guys, this is a demo account, so no worries. It's demo. No, I don't like these games. The more it stays, the more it can still work, but the more it becomes low probability. But we already submitted to that loss, to that 1% loss. So just chill. 12.15. Is that? Okay. Okay, let me look at the 5 minute. We do have this pool over here. So definitely at 1:2, I'm gonna be taking a good amount. I like this. So let me do this. We do have 406. What is 80% of that? 406 units. Well, this one better work. No, go down, don't go up. times 0.8, we do have 324. So let me take out, I'm gonna do like a buy limit. All I'm doing is I'm selling 406 units. I want to buy back 324 of that, which is 80%. And I want, when we get to that, so what's going to happen is I want to move my TP, which will close the whole trade way down here, but I want to take a good chunk of that money over there. So I'll be closing 80% of my position over here, right? So once we get to 1:1, I'm moving my stop by half. So the risk is now going to turn to 0.5%. Once we get 1.5, I'm breaking even, so no risk. The whole thing of that is from looking back at many of the trades I've taken is once we hit 1.5 and then it starts coming back, a high probability is it will reverse. It will take your stop loss. And then the other thing is also to handle my psychology. Imagine seeing like a 1.5 RR, like you were in the money, and then it comes and takes you out. It kind of does something to your head. So if it comes this far, I'd rather it takes me out on break even, where I don't lose anything other than take a loss. So let me get rid of this for now. And so that is done. So we don't need those lines anymore. And then I want us to look at this gap that they've left here. So this is what I like to see. Like they just come into that gap and then go away. It means like there's a high momentum to keep on shooting down. Now look what we are working. That gap over there is still acting as support. So I think we have enough momentum to blow past this. My guy, do not go back. We still haven't gotten to 1:1, so I can reduce that risk by half. But in the meantime, we're doing good. And I think we can still have that short position over there. Is it too noisy? Let me know in the chats if it's too noisy so I can get rid of it. I feel like this is too much. Yeah, it's too much. Yo, my guy, this is too much resistance for my liking. Yo. The other place we'll see some sort of resistance is also, see that gap over there? Just know when price gets there, we're going to see some sort of reaction. Is it enough to hold? I don't think so. The higher it is, on a higher time frame, it's much stronger. But I like to have them there so I can read price. Now this is allowed as long as we don't close above that gap. So that's okay. And let me see what these other guys are doing. Nah, this is too strong. Anyway, let's chill and see. So just 1 minute. Yeah, we do have this 5-minute pool. I do think we will get here, and I think that is where my final TP is going to be at, or I can take a little bit more over there. Anyway, let's see. Yes, I can take some more over here of what will be left at this level over here. I'll close manually if we do get down here. So let me leave a note and say call out. Close some manually. Okay, take partial. Take partial manually. That's a word. I don't like that background pink. Yep, let's go, baby. Let's go. Let's go. Yeah, baby. Let's go. Oh, 1:1. We reduced the risk by half. So it's now at that level. Good. When you get to 1.5, we are breaking even. Like no risk-free trade. So right now we've reduced the risk by half. Let me just make sure it's by half. There we go. Nah, I want it to be at that level. Just above this zone. Yeah. Now this is what I like to see when we start gapping. Because of like they're in a hurry. So they kind of gap like that. Okay, we're just about to get to 1.5 and then break even. So far, we're doing good. Let me see how far we've come. So we've now done 1:1 at least. No, this one stays. That one is there to help us with trade management. Now, all I'm doing is written down. So I've just done it over and over. I don't have to keep on looking at the notes. And let me see if I can pull it. Okay. Let me leave. I'm going to add an alert. Okay, we're just about to get there. So once we get to 1.5, we're going to see some reaction because we do have that gap, even if it's just a little, but I want him to run it down, retest that area, and then keep on going. That's good. We're about to get to 1:1. No, 1.5, so we can break even. Okay, I've put an alert, so when you get there, it's gonna go off. I want to show you that, how do I go about it? Docs, range trading. Okay, thank you. So now we have to remove the risk completely. Now we are in a risk-free zone. Whew, no, that feels good. And then here we're taking 80% off, and then we leave a runner. I'll take some more over here. There we go. We're now up like, let me bring this back. We've now seen a total of 1.56. Now, this is why I usually say, man, when it gets to 1.5, break even. Now imagine you've seen like a 1.5 RR and then it comes back and takes you out on a loss. That kind of messes your psychology a little bit. So break even, we're just about to take 80% because ideally, as my plan, I'm supposed to close everything. But because I think we can still keep on going down, yo, it didn't close me out, my guy. That's because of slippage. Why? That is not good. Okay, it's now going to close out. There we go, 80%. Now we only have 82 units running out of the 400 and something. So when we do get here, I want to take a half. So let me just do another buy limit of, we have 82. So I'm going to take a half, which is 41. Let me just do 42. 42 units, buy limit, boom. And then it's going to be just somewhere there, just before that zone. Ooh, Guys, you've seen the strategy. That's all you need. It works. It works. Now at this point, let me see how much we took. Wow. We came from 412. We're now up at 418. Stop loss is in. So if they come up, we'll still be making like 175. So risk free. So whatever this trade wants to do, we don't care anymore. So it won't be partial anymore. But we did get to 1:2. Beautiful. That's it. That's it for the day. Unless you want to trade again. And as you can see, we've gotten to this part, which is a nice place to sell. Now, I do think that because we are bearish, that we should be able to get down here. So I'm going to put my final TP in this zone, right? In case in the afternoon or when the market closes and opens, they want to continue trading down like they did yesterday. Otherwise, it's a win. It's a win, and we are good. So I can close the stream here, but yep, there we go. Boom, they've taken my second partial has been taken, an additional $1,000 right there. Well, yeah. And now we can leave the final TP over here with 40 units. Remember, we started with 4.3 and we bought them back as price is going in our direction. And now we're seeing that we're doing 2.6. Woo, Jesus. Now, as a beginner trader, this is one thing that can disturb you if you let it to disturb you. You kind of start bitching yourself is, why did I come out here? If I didn't come out, I would have made some more money. That is the enemy, the devil. I promise you, that is the angel of darkness talking to you. If your strategy says 1:2, once we hit that, I'm closing, close. Because the moments that price will come down and get to that point and then reverse and take you out on a stop loss, it messes you up. So the best thing you can do is do like what I did. At 1:2 is where my strategy says get out. I take like 80% and then leave a runner, right? Because I can tell you now, once we get here, price can now reverse. You had seen like 1:2 RR and then you didn't pay yourself, and it comes and takes you out on a stop loss. It feels so bad. It feels bad, and that is just some of our bad behaviors that we bring to trading. But anyway, price will teach you your lesson, so no worries. In due time, you will be disciplined. So if you can get that discipline from the word go, you'll save yourself, right? Yep. Is there a huge potential for it to keep on going down? Yeah. Could we have taken additional trade entries? Yes. The thing is, I've done that before and it works, and then when I do it and it doesn't work, I end up losing a lot. So I think this is the way to go about it. Just get your 1:2, leave a runner, grow slowly, right? And that's it. So let's do a quick review. In this at this point, we did get to that spot over there, which I think is where I wanted to take the final TP. But yeah, my final TP should have been here. But then again, guys, it's all good. I'm leaving a small portion to get to this low. If it's taken out, it's all good. High probability, yeah, to be taken out, because remember, we're now in a zone to buy. But it's now going to 12.30. Okay, let me get rid of all this. So 1:2 was right about there. Get rid of that, get rid of this, and that one. We have a small portion left, but then it's the 1 minute. Now look at this, that gap over there. See what price did? We went past it, but now price is coming back and it's acting as support. And now it might just keep on shooting down, but now we don't get married with those. Those are short-term levels that we will not keep in our heads. So that's over and done with. That's it. Good win for the day, and we are done. So our first TP was here and our second TP was right there. So that's a little over 1%, which is good, 1.5%. So let's do a recap of this and then I'll just end the stream. Unless you have questions, you can type them on the comment. I'll be glad to answer them. Oh, so this right here is the entry criteria, right? Previous range, which will be 30-minute range, liquidity grab, trade below it, and then we return to the range. I'm looking for swing formation and then entry at the swing. A TP is 1:2. You saw how I managed the trade. All of it is written down. You have to have a process that you follow like a robot, because these markets, they don't care about your emotion. Move stop to reduce the risk by half once you get to 1:1. Move stop to break even when you get to 1.5, and then move stop to, okay, this is a little bit advanced, blah blah. This is a loss. If we were to risk that 1%, if we go in again, we risk a half. If we lose, we go in again, we risk a half of this, which will be this. If you have to keep on going, you only risk 0.25, and then once you're down, like down 3.75%, close your charts and you're done. That's it. It's all written down, and that is kind of something you have to have. And then you keep on doing it again, and then it becomes muscle memory. You don't have to keep on looking at your notes. Okay, let's do a quick recap and then I'm done. We are out of here. So I'm going to, this is kind of where we were when we came in, right there. None of these levels were there, but I'll just let them to stay. So we did our analysis, blah blah. The last step was note where we are with regards to the previous 4 hour. When we are in the gray zone, right, which is the bottom half of the 4 hour range, we're looking for buys. If we're in the top half of the range, we are looking for sales, right? So ideally this one is where we should have looked for sales, but then again my bias was bearish. So ideally it would be nice to wait for trade to come here to look for a sell, right? But that right there should have been an entry if we're doing these aggressive things. But yeah, I think I chose to wait. Plus that TP was too huge, so that's not what we did. So now we waited. We're now back inside the range. We wait for the range to be taken out, for them to create a low for us, which is our entry trigger, and we take that entry to the downside. Boom, it went up a little bit. So this is when we had already entered the trade, and we were looking for some, last line of defenses, like those up candles before a decline. There's people who that is their strategy, like they'll have that last candle before the decline. When the trade comes up there, they're selling, and that is just too aggressive for me. So that will be their stop loss, and then they can look for something down here. It pays a lot, but then you're gonna also be taking a lot of losses. But at the end of the session, it should be profitable because it really has a high return. For me, I have to wait for the previous 30-minute range to be traded, and then they leave a low. And for me, that was a swing low, and that's what we did. That swing low is what we used as our entry. The stop loss at the highest high that they leave. And then I believe this is what triggered us, right? And then immediately it went back to drawdown. I like when I'm triggered and the trade just goes down, but it's all good. And at this point, I thought that we were going to lose, but then just remain calm. The stop loss is right there, this job. If you're taken out, you're taken out, so be it. Then boom, 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 boom. And then what we let me do something. So what I do is, we've now met that the entry and everything. Once we're in, we now move to the trade management segment, which would be I usually take my fib from my stop loss to my original entry, because what happens is price, because of a sell stop, it doesn't give, sometimes it will give you the exact price, but like today we got a slippage where they filled us down a little bit. But with the trade management, I'll still keep it at the original trade entry area. So once we get to 1:1, I reduce my risk by half, which was right there. I reduce my risk by half, right? Once we get to 1.5, I remove my risk completely, and my trade should end at 1:2. If I think we do have a potential to go down, I close 80% of the position, right? And the rest can do whatever it wants to do. So like now, this is where we are at, and we are coming back aggressively, and we're good. We've taken 2 partials out of 403. Let me see, what would the math be? We only have 403 minus 40. How would I do it? No, we only have 30 divided by 403. We only have times 100. So we only have like 30% remaining. Is that how you calculate? Because 40 is what? Whatever. We have like 30% remaining. So no, it cannot be 30%. Math is not mathing. How would you do it? So we took out 363 of 403. Oh, that'd be divided by 403. So that will be 90% times 100. So we only have like 10% of the original position remaining, which is good. So meaning we've closed out a total of 90% of the trade. Do I still think we'll get here? Yeah, I do think we'll get here, but no risk involved. Now, I'm seeing this gap here, so I'd like my trade to be just a little bit above it, my stop loss. Ideally, it would be okay for it to be above here, but I'm not taking even a $1 loss. And unless there's any questions, I'm going to close the stream here. Done for the day. Now you see, guys, the importance of demo trading. You kind of demo until you have a written down system that you see working over and over again. So now when you're going to the live account, you're kind of relaxed, right? You're kind of relaxed. And I'm saying this because I've traded live accounts too. Banned a few, but when I was banning them, I had no written down process. And pretty much that's it. And I'll see you guys tomorrow. Please leave a like in the chat. I'll be grateful. Leave a comment too as well. And I'll see you guys tomorrow. If there's no more questions, I can hang out until, let's say, 12:45. So that will be 7 more minutes, and then I'll close the trade, the stream. Done for the day. So when you start demo trading, I'd advise you to start with a big account. Kind of, I don't know, condition your mind to operate in big big C's, or what do I say? Kinda, I don't know. Just train your head, get out of that small box. Get like $100,000 account. Now, is it possible to get such funding? Yes, we do have prop firms. For example, like this one here. If I want to get $100,000 account, it costs me like $400, right? But then I have to pass these two challenges. The first step is I have to make a profit of 7,000. If I do that, then I can go to the next step, make a profit of 5K, and then when I meet those requirements, I can now have access to 100K, and whatever money I make, we split with them for 85-15, right? So I've tried, and I tried on the 25,000 challenge account. The first time I tried, I passed the first one, but then I didn't pass phase 2. The second time I tried, I passed phase 1 and phase 2. It actually made some money, but then they have this stupid rule. Anyway, that you cannot lose more than 4%. So that day, I kind of got into some emotional trading, and I knew that I didn't want to lose this, lose more than 4%. But then again, they have this rule where they either look at the starting balance or at the running balance. So I didn't know about the running balance. So what happened is I had profits running from the previous day. So now that means that my running balance was much higher. So the profits that I had to lose, I don't know if that makes sense. So I had timed myself not to lose more than 4%, but then because I had also the running profits that I had also been calculated, I just found an email. Oh, sorry, you've lost your funded account. Ugh, that was the worst feeling ever, because I had a chance to withdraw more than 5%, which I would have used to level up on these challenges. But no worries, soon enough, I'm gonna be going back and attempting to get either this one or this one. But for now, no worries. And I think I'll do it publicly or whatever, just to show people that it is possible. It doesn't matter if you are in a toilet in Tarakaniti, doesn't matter. As long as you have the internet connection and the determination, you can just come and start with this small account, which is $67, and can have access to 10K, right? And then level up. It is possible. It is very, very, very possible. So, yep, we'll be back in the game. We'll be back. Get some real moolah. In the meantime, have your demo account running and start practicing. Ask me any questions and I'll be glad to answer them. Make sure you like the stream. I'll be very, very glad to answer whatever questions you have. So since they'll be taking out my runner, it's all good. Do have some unfinished business here. Let me see what these other guys did. Short to the downside. I like this. I like that. So this is a probable area. We can see price because we did see some consolidation. This is the first fair value gap. This is the second one. This is what I'm going to do, right? We've already made enough. So let me give this some space too. I'm going to put my TP just above this high and only risk losing $47, which is nothing to what we made today. Just in case they come in here and they're planning to respect this area, because we know they can come up with a wick and then still stay below it and shoot to the downside, because I do believe we have unfinished business. Another thing we can see is we are consolidating. See how we're moving sideways from 7 a.m. this morning PST. We are moving sideways, it has a tendency of coming down, going up, coming, and we don't know how much longer this consolidation is going to go for. So yeah, okay, let me do this. Let me not be greedy. Let me have my, you know what, I don't care, right there. It's now 1 more minute and then we're done. Thank you for joining in. That was Trader Mawera, and I'll see you tomorrow. God bless you all. Remember, keep honing your skills, and your skills will take you before kings in due time, right? Yep. Those who are interested in my strategy, let me know in the comments, and I can put it together and share it with you guys for free. For free. Freedom. You're gonna come in, take out that sell side, and then shoot them. Yeah, so that has been taken. I like how just go to that candle and then we shoot down. No, the guys who trade, like, see, go down on a 1 minute and then, you know, look at the last up candle and then shoot down, and that is a trading strategy. This will be their risk to reward ratio. Stop loss just above that high, and if they're risking 1,000 bob, they would have made 7k. That would be their entry right there. And then wow. And then again, if they're looking at the last down candle before the shot up, and that again is their entry, they still use that candle as their entry, and then that same candle as their stop loss, but then they would have been taken out. So that is why I don't like that strategy. But anyway, maybe if they put it below that low, still they would have been taken out. So let's say they did maybe use that low, they'll be up, like, yeah, I don't like that strategy. It's good, but a lot of losses involved. Okay, 12:45, guys, I'm out. Thank you for joining in. Go back, look at the stream one more time. Any questions you have, ask them in the comments, and I'll answer them. Otherwise, see you guys tomorrow, same time, 11 to whatever. I'd like to trade that 12 p.m. candle, 12 p.m. PST, and keep on joining the stream, and you're gonna be a master of that 12 p.m. candle with me, right? You kind of know in and out of it. Anyway, guys, I'm out. See you tomorrow, same time. Mic check. Someone is still watching. Nah, nah.